It feels kind of like 2005 again, doesn't it? Everyone's buzzing about this everything bubble. News sites are full of warnings that stocks, crypto, and even the housing market are headed for a spectacular crash, like the whole economy is a giant Jenga tower about to fall. But it's easy to forget. Those experts crying doom aren't always right. Remember all those predictions about the 2020 pandemic ruining the market? Instead, we got a weird boom, so maybe it's different this time, but maybe it's just more of the same noise. Here's the thing that makes people nervous, though everything is hitting record highs. What if all the fear about a bubble popping is the thing that's off? Think about it. Usually prices this inflated mean the government's pumping tons of money into the economy. That fuels crazy spending and drives prices up, but that's not what's happening now. The opposite, even they're trying to tighten things up. So something else has to explain the wild market we're in. Let's be real, the vibe in 2024 is weird. The pandemic fallout still lingers, and now the government's piled on a ton of debt. We hear words like recession getting tossed around, and even though inflation seems to be cooling, it's still way too high. It's a perfect storm of uncertainty. This might be why those with money are scrambling for anything that looks stable, seeing their savings vanish into thin air. The truth is, nobody has a crystal ball. This could all unravel in a spectacular crash, a 2008 repeat, but maybe amped up. Or the panic could be worse than the reality, and we might just muddle through with a few bumps and bruises. The weird thing about the everything bubble is that it might be less about reckless greed this time and more about plain old fear of what's coming. Let's get specific. Normally gold is your safe haven when times get weird, but gold's been doing crazy stuff lately. It soared after the pandemic panic, then dipped, but now it's back near $2,000 an ounce or whatever the accurate 2024 price is. That's not stability. Same with Bitcoin. It's been on more roller coasters than Six Flags. The stock market is just as confusing, bouncing all over the place. And yeah, house prices did that weird spike, then a small correction, but they're still way higher than they were in 2019. When prices act this odd, it's usually a sign someone's messing with the money supply. You know, the government printing a bunch of cash, making everything seem more expensive. That's what fueled the post-pandemic boom, but they've slammed on the brakes since then. Interest rates are up. They're supposedly shrinking the money supply, so why are prices still acting nuts? This is where things get uniquely 2024. We're not just in a post-pandemic funk anymore. We're also dealing with record government debt. Interest on that debt alone is astronomical. This has everyone on edge, wondering when the whole system just stops working. The normal rules of economics seem broken. That's probably why those who have money are desperately trying to park it somewhere it won't disappear. Maybe the bubble isn't about getting rich, it's about not getting poor. Imagine your paycheck's buying power shrinks every month like it's got a hole in it. You'd scramble to turn your cash into anything that might hold value, right? Doesn't matter if that Bitcoin, a boring stock, or a two-bedroom apartment suddenly seems wildly overpriced. It still feels safer than watching your savings turn into monopoly money as prices keep rising. And that might be what's pushing this weird market more than the usual boom and bust cycle. Logic says that if everything's expensive, someone must be messing with the money supply, right? It's basic economics. Flood the market with cash and prices naturally inflate. That's exactly what happened when the COVID crisis hit. The government printed trillions to keep things afloat. We're all paying the price for that now, but they've changed their tune, at least for the moment. They're talking about being responsible, shrinking the money supply, all that boring grown-up stuff. So what gives? The thing that keeps everyone awake at night isn't just inflation, it's the insane amount of debt the government's racked up. We're talking over $30 trillion update with accurate 2024 figure and growing fast. It's like a maxed out credit card with insane interest rates, and we're the ones stuck with the bill. Paying that interest alone is eating up a huge chunk of our budget, and what happens when we can't even afford the minimum payment? That's not some distant threat. That's where we're headed if things keep going like this. Picture the government as someone who's gone wild with spending, but their income hasn't kept up. They need to keep borrowing just to survive, but their credit is getting worse. Eventually, nobody's going to lend to them. That's a default, and it would be a global economic meltdown. So desperate times call for desperate measures, and we all know the government's go-to move for a quick cash fix. Remember 2020 and 2021? It wasn't just businesses getting stimulus. The government essentially printed money and handed it to itself. This is exactly the thing they're supposedly not doing right now, but what if they have to break that promise? What if the only way to avoid total disaster is to hit the print button again, flooding the market with cash. It would drive prices even higher, making everything even less affordable. But sometimes it feels like the government's caught in a trap of its own making. This isn't like those classic bubbles where everyone's drunk on easy money, gambling on stuff they don't understand. This is more like a slow motion train wreck. The government has to keep spending and borrowing, but the path they're on leads to either a disastrous default or them turning back to the printing press, which has its own awful consequence. That's probably why prices are acting so weird. It's the market bracing for one of those two terrible outcomes, and nobody knows which is worse. Imagine the government as a reckless driver who's ignored all the warning signs and is now barreling down a dead-end road. The gas tank is on empty. That's the insane debt, and they desperately need money just to keep moving. Trying to borrow more is like calling every friend you have for a loan, only to hear no each time your credit score in tatters. Logically, this ends in a crash, defaulting on the debt, but that would be worse than a personal car wreck. It would be an economic apocalypse. When a crisis hits, governments have a predictable playbook: print more money, pretend it's an emergency measure, promise it's temporary, and hope the fallout isn't too bad. The tricky bit in 2024 is that they can't fall back on lowering interest rates. They're already high because of inflation. It's more like being stuck in a high gear engine screaming with no obvious solution. Think back to how the Fed handled that 2019 meltdown in the banking system. Overnight, they created billions of dollars, basically bailing out everyone involved. They called it repo market stabilization or some similar boring name, but it was money printing, plain and simple. Expect them to pull the same trick again, but even bigger this time. The public has wised up to the government's usual tricks. If they announced massive bailouts for banks and corporations while everyone's struggling, there'd be riots. So instead, get ready for the most confusing financial gymnastics you've ever seen. They might force banks to buy mountains of government debt using money they essentially create out of thin air. Same result: more money circulating, but without the scary quantitative easing headlines. Don't misunderstand, the government's not doing this to boost your job prospects or make stocks go up. They'll call it stabilizing the markets, but the real goal is simple: avoid defaulting on that debt at all costs. The consequences of printing our way out of this mess will be painful for everyone else. Inflation on steroids, your savings losing value even faster, but to them, it'll likely seem like the lesser of two evils. This is how you get a hyperinflation situation where prices spiral out of control, like we've seen in other countries, but never at this scale before. The thing about economic crashes is that they're rarely a complete surprise. Smart money, the big players, usually see the signs well in advance. What we think of as a bubble is often just those with resources getting ready to weather the storm. It's like when a hurricane warning gets announced, people don't head to the beach, they stock up on supplies and board up windows. Remember how months before inflation numbers went truly nuts in 2021, stocks and other assets started surging? That wasn't random smart money. Knew the government was pumping the system full of cash, and inflation was the inevitable result. This time the trigger isn't direct money printing, but the eventual consequences, inflation or default, are just as scary to those paying attention. The scary thing is everyone piling into safe assets can make the situation worse. This high demand drives prices up, fueling inflation, even if the money supply itself wasn't the initial cause. It's like a run on the bank. The fear of it failing is what causes it to fail. If the government can't calm the markets, the bubble everyone was worried about becomes real, just from the stampede away from cash. So is it a bubble? Kinda, but not in the way you expect. It's the government's mess causing people to panic buy assets. There's going to be volatility, probably a big stock market crash at some point. But like in Venezuela during their hyperinflation, stocks will likely ride it out better than cash in the long run. Could get even uglier though. The Fed might try to pull a sneaky move and have banks print the money instead. Lots to think about.